Welcome to Global Watch. Please subscribe and hit the bell icon for more breaking updates. For more than 100 years, the Panama Canal has stood as one of the world's most important shortcuts for global trade, revolutionizing the way goods move between continents. This engineering marvel, carved through the narrow isthmus of Central America, has enabled ships to bypass the long and perilous journey around the tip of South America, saving weeks at sea and billions in shipping costs. By connecting the Atlantic and Pacific Oceans, the canal has become a vital artery for international commerce, with thousands of vessels passing through its locks every year, carrying everything from electronics to energy supplies. But today, this crucial waterway faces mounting challenges. Climate change is causing severe droughts, reducing water levels, and limiting the number of ships that can pass. Geopolitical rivalries and shifting alliances are adding new layers of uncertainty, while operational bottlenecks threaten to slow global supply chains. In response, Mexico has unveiled an ambitious plan, the Interoceanic Corridor of the Isthmus of Tehuantepec, or CIIT. This multi-billion-dollar initiative aims to create a modern land bridge across southern Mexico, offering a new route for global trade that could rival the Panama Canal. The CIIT will link deep-water ports on the Pacific and Atlantic coasts with a high-speed freight rail, allowing containers to be transferred quickly and efficiently across the narrowest part of Mexico. This strategic alternative could help ease congestion and provide shippers with more options. As droughts continue to lower Panama's water levels and global tensions threaten established trade routes, Mexico is positioning itself as the world's Plan B, a backup that could become essential if the old routes falter. With $7.5 billion in investment, the CIIT is rapidly moving from blueprint to reality. The project promises not only to reshape global trade routes, but also to bring long-overdue economic development and new opportunities to a region of Mexico that has often been overlooked. This is the story of a monumental gamble, one that could alter the balance of global trade for generations to come, and redefine the economic landscape of the Americas. Will the CIIT emerge as a true game-changer, transforming Mexico into a new crossroads of global commerce? Or will it remain a secondary route, forever in the shadow of the Panama Canal? The world is watching, and the stakes have never been higher. The dream of crossing Mexico's Isthmus of Tehuantepec is far older than most people realize. Its origins stretch back centuries, long before the Panama Canal was even imagined. This narrow strip of land connecting the Gulf of Mexico with the Pacific Ocean has always held a special allure for explorers, traders, and empires seeking a shortcut between the world's great oceans. Spanish conquistadors were among the first to recognize its potential, envisioning a route that could transform global trade. Over the centuries, various schemes were proposed, but it wasn't until 1907 that the Tehuantepec Railway finally opened, instantly becoming the world's most efficient interoceanic land bridge. The railway was a marvel of its time, connecting ports on both coasts and dramatically reducing the journey for goods and passengers. For a brief but remarkable period, cargo moved swiftly across Mexico, bypassing the long and perilous journey around South America. The Tehuantepec route proved its commercial value, attracting international shipping companies and fueling economic growth in the region. But in 1914, the world changed. The opening of the Panama Canal offered ships a seamless all-water passage between the Atlantic and Pacific, making the overland railway route less attractive almost overnight. The Tehuantepec Railway, once a symbol of progress, quickly became obsolete as global trade patterns shifted. The Tehuantepec route faded into history, its tracks slowly reclaimed by nature and its stations left to decay. It became a poignant symbol of what might have been, a grand vision overtaken by new technology and changing times. Now, more than a century later, that old dream is being revived with renewed energy and ambition. Modern construction crews are breathing new life into the railway, and the region is once again buzzing with the promise of transformation. President López Obrador has made the Interoceanic Corridor of the Isthmus of Tehuantepec, or CIIT, a national priority. This renewed focus is driven in part by the vulnerabilities now facing the Panama Canal, including drought and congestion, which have exposed the need for alternative trade routes. Today, the Tehuantepec route is no longer just a historical curiosity or an old ambition. It has become a strategic necessity for Mexico and for global trade. The stakes are higher than ever, as nations and companies look for new ways to move goods efficiently. By modernizing the old railway, upgrading ports, and investing in logistics, Mexico is betting that the Tehuantepec corridor's time has finally come. The country hopes to position itself as a vital link in the global supply chain, connecting continents and driving economic growth. The CIIT aims to transform a forgotten corridor into a vital artery for the future, one that could reshape trade routes and bring new prosperity to southern Mexico. History, it seems, is getting a second chance, and this time, the world is watching. The Interoceanic Corridor is a massive undertaking, backed by $7.5 billion in public and private investment. At its core, a complete overhaul of the 308-kilometer railway connecting Salina Cruz on the Pacific to Coatzacoalcos on the Gulf. New tracks, high-speed double-stack trains, and upgraded signaling are transforming the line into a modern freight corridor. 10 industrial parks along the route aim to attract manufacturers and create a vibrant economic ecosystem. The government's aggressive timeline targets full rail completion by June 2026, racing to capitalize on Panama's current vulnerabilities. Both ports are being expanded to handle large container ships with new cranes, deeper harbors, and improved connections. The corridor's success hinges on world-class port infrastructure. Without it, the railway is just a bridge to nowhere. Mexico is betting big that it can deliver. In March 2025, the CIIT marked a milestone, its first major commercial shipment. 900 Hyundai vehicles arrived at Salina Cruz from South Korea, bypassing the Panama Canal. Offloaded and loaded onto rail, the cars crossed the isthmus to Coatzacoalcos, then continued to the U.S. This successful operation was more than a test. It was proof the corridor could move high-value cargo efficiently. The event drew global attention, showcasing Mexico's readiness to handle time-sensitive shipments. It shifted the narrative from promise to reality, silencing skeptics and attracting interest from major shipping lines. While just a fraction of the volume the CIIT hopes to handle, it set a crucial precedent. The corridor's backers gained confidence, and the world took notice. The groundwork is laid for regular high-volume traffic. Meanwhile, the Panama Canal faces a crisis. Severe droughts, worsened by climate change, have dropped water levels in the canal's reservoirs, forcing strict limits on daily ship transits and cargo loads. These restrictions have created costly delays and backlogs, disrupting global supply chains. The canal, vital for 4% of global maritime trade and 40% of U.S. container traffic, is struggling to maintain its reliability. The 2016 expansion allowed larger ships, but these require even more water, compounding the drought's impact. As costs and uncertainty rise, shipping companies are seeking alternatives. The once unquestioned reliability of the Panama Canal is now in doubt. The world is searching for resilience, and Mexico's CIIT is stepping into the spotlight. The Panama Canal isn't just an engineering marvel, it's a geopolitical flashpoint, a narrow waterway with outsized influence on global trade and power dynamics. For over a century, it has been a symbol of strategic control, shaping the fortunes of nations and the flow of commerce between oceans. Today, the U.S. is increasingly uneasy about Chinese-linked companies operating both canal entrances, seeing this as a direct challenge to its traditional influence in the region. American officials fear that Beijing could leverage this control in a crisis, potentially disrupting the flow of goods or gaining valuable intelligence on global shipping. Tensions erupted in 2025 over a proposed $22.8 billion sale of these ports to a BlackRock-led group, which Beijing fiercely opposed, viewing it as a threat to its economic and strategic interests in the hemisphere. Chinese state media condemned the deal in strong terms, warning of dire consequences for regional stability and hinting at possible retaliation. As uncertainty grew, shares in the operator plummeted, sending shockwaves through financial markets and raising questions about the future of the canal's management. The sale's future became uncertain, with negotiations stalling and both sides digging in, unwilling to cede ground. The episode revealed just how far China will go to protect its strategic interests, deploying diplomatic, economic, and even military signals to assert its position. For global shippers, the risk of the canal becoming a pawn in great power rivalry is deeply unsettling, threatening the reliability of a route that underpins world trade. This uncertainty makes a neutral alternative, like the CET, even more attractive, offering a potential escape from the crossfire of superpower competition. Located in a US-aligned country, the CET promises a more stable environment for international logistics and investment. The corridor offers supply chain diversification, giving companies and countries more options and reducing the risk of disruption from a single choke point. By providing an overland route, it reduces dependence on the canal and helps ensure the smooth flow of goods even in times of crisis. The strategic calculations of Washington and Beijing are now shaping global logistics, with every move watched closely by governments and businesses worldwide. In this high-stakes game, the future of global trade hangs in the balance, and the stakes have never been higher. The CIIT promises to transform southern Mexico, especially Oaxaca and Veracruz, long left behind economically. Billions in investment and new industrial parks are creating jobs and opportunities, aiming to curb migration north. The corridor is designed to attract manufacturers, boost GDP, and make Mexico a more critical global trade partner. Infrastructure upgrades will ripple through tourism, services, and real estate, shifting the nation's economic geography. But challenges remain: environmental concerns, land rights, and the need to protect local communities and ecosystems. The government must balance progress with equity and sustainability. Despite its promise, the CIIT won't replace the Panama Canal as the main global shipping route. Transloading cargo across land is more complex and costly than an all-water passage. Panama's scale and efficiency remain unmatched, especially for bulk and high-volume traffic. But the CIIT excels as a strategic backup, ideal for time-sensitive cargo and as a pressure valve when Panama is congested. Its value lies in redundancy and resilience, not in outright competition. The future will see both corridors coexisting, each serving distinct roles in global logistics. The CIIT's success will be measured by its ability to relieve pressure, capture niche markets, and provide a reliable alternative. We're at a turning point in global trade. The CIIT is more than steel and concrete. It's a response to climate, competition, and shifting power. The Panama Canal's vulnerabilities have opened the door for Mexico's bold new corridor. The first successful cargo run proved the CIIT is real, not just a dream. While it won't dethrone Panama, it will complement it, making global supply chains more robust. The map of trade is being redrawn by necessity and ambition. As these two corridors compete and coexist, the real winner may be the global economy itself. The story is just beginning. Stay tuned as the tides of commerce continue to shift.